Hello, everyone. I hope you guys are having a good day. And I'm just going to be doing a very quick update here, a bit of an emergency video, if you will, but it's not really that much of an emergency since like the markets are closed and there's nothing that you can really do about it if you're in options or calls or puts and calls, anything like that. But if you still trading after hours, I guess you'll maybe catch this video in time. But overall, another very big down day again in the markets today. A very significant one once again. Today, more selling in the S&P, followed with more volume on top of yesterday's volume as well. 94 million, now 115 million shares. Meta earnings definitely disappointed with their guidance, I guess. And I didn't watch too much of it, but we had a huge drop initially, and then we had a lot of whipsaw throughout the day on Meta, up and down. So you drop, and then huge rally back up to essentially almost back to the open, a 6% rally basically, and then again another 3% drop, and then another rally, and then a drop into the close, and then in the after hours it's up 50 basis points. So overall, a net down day again in the magnificent seven. 1, 2, 3, 4, 5, 6, 7, all of them down today. Not so magnificent now, obviously, but overall, I still do believe the markets could be headed lower once again. Even tomorrow, we might gap open in the green, but tomorrow again might be a potential low in play. So if we get a rally tomorrow on volume, a potential low might be in place, and it could be a short-term low. It could be a long-term low. We'll have to see how everything goes. But overall, right now, Amazon earnings looks like they beat on all their metrics and had good guidance. I was watching the conference earlier, so they're up about 5% in the after hours, even with their 5-6% sell off in the recent days, 8% sell off. They are up back up to 125. But again, it's important how they close. So if we close in the red again, even with a gap up, and we sell off kind of like Microsoft, we gap up on earnings, and then Microsoft sold off all of its gains today, back essentially down to 330. Then that's not going to act very well. Okay, that's not going to go very well at all. But overall, very nice price action today, for us at least, because again, I've been warning you guys for months and weeks, essentially since basically like September 1st, once we cross, or like September, August, once we crossed into that red money flow, we had I was essentially getting very bearish on the indices. We had red diamond signals on the daily. Weekly time frame was also showing a weakening and a shift in the trend, and now it's really starting to show, right, that the trades are really starting to pay off. A monthly time frame, a red dot on, and a 16 and a -5 on the dual band strength index on the S&P. So again, overall, the larger pattern, in my opinion, is that this was our B wave top back in July, and we are going to now start to head down, right? And again, we'll have to see day by day, week by week, trade by trade. But overall, everything's going according to plan. But now we're going to get to an inflection point where we could potentially get a bounce. And now I'm looking for potentially maybe us to drop to 410 to 408 on the SPY, or 4080 on the S&P, and then maybe we might get a bounce there. And we'll have to see if this is a wave 5 bounce and we start to go impulsively up in a 5-wave move, which would be bullish, right? This would take us to new highs on the market, and we'll have to see how everything plays out. But overall, this is a potential scenario where the markets can bounce and go to new highs. But right now, with all the earnings and the geopolitical conditions, I see this as the least likely scenario. But you can never discount things. 4-hour today came back down as well. You do have bullish divergence, but if you go lower and you erase divergence, then that will be bad. But for the time being, everything seems okay. If you look at the S&P, so this is our bearish scenario. We'll have to see if we do get a bounce, and if it's a sustained bounce and we go higher, or if this is going to be another bounce and retest of the 200, and then another leg lower down once again, which could again extend the 5th wave essentially right here. The fifth wave doesn't have to finish tomorrow. It can finish tomorrow, but if we bounce and we fail and we go even lower, then it's just going to be another fifth wave extension. And then if we look at the bullish scenario, we bounce. Sorry, this is the bearish scenario. I bounce and then go lower and then come up in wave 2. And this is essentially what I'm talking about, the wave 2, so or the wave 5. So the bearish scenario is that this is going to be a bounce area, and we are either going to get. Let me try and select this here. There we go. We're going to get the bounce here, which means this count was a 1 here, a 2, a 3, a 4, and then a 5. Right, and then the bearish count could be finished, and we're going to come up in a wave 2. Now, the important thing to mark is that to take from this is that if this wave 1 is finished and this turns into a wave 2, then this rally will fail and we're going to go significantly lower. But if we break, in my opinion, this trend line and we keep going higher on the S&P, then you have a really good chance of going to do all-time highs. But again, that right now is not where we are at. That's 40.45. We're at 412 on the S&P. We still now we have the moving averages starting to shift. We have a lot of resistance above, and we've gotten a lot of damage done to the mega caps, and that may be a shift in investor sentiment. Maybe they're going to start to reallocate their funds to maybe just cash or bonds. Today we saw a huge down day in the 20-year yield, the 10-year yield once again, and this could be maybe the start of the top in yields, right? So I still think that they're going higher, but if you see a major crash or a big sell-off in stocks and it continues and you see yields start to drop, you're going to see people just dumping their equities to get into bonds, right? And then you'll have the bottom in the TLT, and then you'll have a huge rally in the TLT back up to maybe 15-30% rally. But we'll take it. We'll take that trade once we get there. I don't think we're there yet because we haven't taken these lows out. But if we do take out these lows, then yeah, I'll start to look at that scenario as the more likely scenario that the yields have topped. Looking at the dollar today as well, dollar was very strong at the beginning of the day. We'll just get on some smaller charts. Lots of news came out today. We had lots of news coming out from Europe and their interest rates. And then I believe, if I'm not mistaken, someone spoke or had a speech, ECB press conference, and then FOMC Fed Waller was speaking. And then we had pending home sales, all that stuff. And that actually pushed the dollar up a bit. And we closed in the green once again. I think that us taking out this pivot here at 106.7 was a clear sign that the dollar wants to go higher, but we didn't close the day here. We closed back at 106.6, but we got over that 106.5 mark, which was an important level for me. So I think the dollar's just getting ready here to just go back up to 109 and 111, which is again bearish for equities. But it doesn't mean that we can't have the markets rise, right? The markets can get a pause and rise back up and then reset the stochastics and then start to go back down. Look, something that important that happened today as well is that we've been getting so much selling in the NASDAQ. The NASDAQ has finally printed its red dot on the monthly time frame, and we have 4 days to close this month, right? So if the NASDAQ remains bearish and we close out the month with a red dot, then that would be extremely bearish in my opinion. And I think we could be getting ready for a multi-month sell-off to continue and the downtrend to continue. And looking at all the other charts as well, not just like the ONDA chart, looking at the futures, the triple Qs, it is looking increasingly bearish for the NASDAQ. The S&P and the IWM have been very bearish for a very long time. Let me look at let's check the IWM now. So the IWM essentially almost took out its October pivot. You are starting to see the bulls step in and trying to defend this level. Today we had like a 1% rally today up to the highs, and then it came all the way back down and lost all of its gains and closed actually up 26 basis points, which is not bad, all things considered, how everything else was doing. But overall, if the IWM takes out this pivot, then you're going to have a flurry of selling. But right now, you know, the IWM can push up. I think if you, let me just adjust this here. But that's not a trend line. That's just like a bull flag, you know, target I think that I drew out. But let me just draw a trend line here. Let me just pull it up. If the IWM, the Russell 2000, can maybe take out this resistance, which by the way we're still very far away, I think that you might have a chance to go back up and retest maybe this resistance. But right now that's not where we're at, and you can even draw another trend line down because the sell-off is so steep. You really need to start to break this resistance. If we get on maybe the smaller time frames like the 4-hour, you can rally back up, but you can get rejected and go lower. So essentially, you need to take out this this RSI resistance. So you can get a rally, but these rallies can fail, and you can keep going lower and lower and lower, like we've been doing here. You got to bounce, rally. Everyone thinks that's the low, and then you get rejected and you go lower. You bounce, you rally again, trying to break out. Bulls are just using so much firepower, trying to push, 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 buy, buy, buy. It's just not working, and then selling and so much selling, and you know the selling continues. So, in my opinion, there's like a lot of denial in the market. People do not want it to go lower. Everyone is looking for the bullish pattern, a bull flag continuation pattern, a cup and handle pattern now, and they're looking for it, right? They're hunting for it. They want this to be the low. They want it to rally like this and just keep going on forever and forever and forever like we've been doing. So it's very possible that we could still get a very, very big sell-off, because if you look at how much selling we've been experiencing in the market, and the VIX is only at 20 still, that tells you that the investors, the traders, they're not scared. They're buying the dip. They're buying the dip. They're buying the dip. They're buying the dip. They want to go up, right? But if, you know, we keep going down and down and down, fear might finally start to set in. You'll get panic, and then you'll get panic selling, and then that's probably when we're going to have a definitive bottom, and that could bring us even as low as 3,800 on the S&P or 380 on the SPY. Okay, so that's something important to take note of. Or sorry, not 380, but maybe 390. It really depends on when you make when you find your support. But I think we have some really important upsloping trend lines here. We broke this one. This one was invalidated. We can get rid of that one. Now we have this major one dating from 2020 all the way to 2022. And now we're going here into 2023. We'll have to see if we make contact. If we push that low even back down to the 400s, and maybe get a huge bounce from there. So again, I don't want to speculate on anything, but again, everything's been that I've been doing has been working. It's been playing out. Today on the daily, you can see that the momentum waves are starting to curl in a little bit on the IWM. Tomorrow might be a green day, and if it is, that's great. You know, we took a lot of profits today. I'm going to be posting the signals inside the Discord on Crypto Mickey. I'm working on the hedge line trading one, but I just opened it for you guys to join. So if you want to join, you know, feel free to join. We could chat a bit, but there's nothing really there right now. And then to basically wrap it up, be careful out there. Don't go in too heavy, especially on the long side. Just play defensively. If anything, just sit on cash and wait for the trend to play out. But right now, those call options are on the call side are quite cheap. So if you want to risk it, I would play it with call options. Anyways, have a good day, guys. None of this was financial advice. Hopefully, you enjoyed the rest of the week.